All right, guys, we'll go ahead and get started. First, I just want to say welcome to this week's weekly Sonar update webinar. I hope everyone's having a great week. I am Grayson Ballard. I am a Sonar account executive. I'm actually filling in today for Brad Ganane, who is our normal weekly webinar moderator. And I'm also accompanied by Zach Strickland, who is our market data analyst. Today, we're going to cover several new items, actually, some exciting information that we've recently just put into the Sonar platform. We've got some what we're calling tri-delt information, which is weekly, bi-weekly, and monthly changes of the outbound and inbound tender rejection index. We've also got some BLS data, which is Bureau of Labor Statistics, and we'll show you guys, we'll dig in and show you how we can use that information. It's basically a measurement of employment, and gives you a good measure of how what the industry health looks like and how the economy is affected by the labor statistics. We'll also, towards the end, kind of dig into more of a basic 101 in terms of we've got some new videos out for new users. This particular webinar is going to be a little bit more of an advanced version of how to dig in and use this data. And then towards the end, we'll show you guys where we've got some of the 101 videos and how to, get a hold of us and ask questions. And talking about asking questions, guys, feel free to, at any point during this webinar, go to the Q&A panel and ask a question if you have one, or if maybe we haven't explained something well enough. Please feel free to chime in and let us know, and we can address that. So with that being said, I'm going to hand over the first bit of the webinar to Zach about the tri-delt information.
Yes, welcome everybody. Hope everybody had a good 4th of July week off. Welcome to the next sections of webinars for the Sonar platform. So over the last couple of weeks, our data scientists have been busy putting together some new tools for us to use and some stuff that actually two polarizing things here, and polarizing is probably the wrong word, but we're talking about a very high level economic indicator and a very more granular economic indicator, the tri-delts, as we're affectionately calling them, the changes in the tender rejection indice variations. Now what that is, and you see here on the map right here, these are, I've got the outbound tender reject index weekly change. So basically what we've done here is made it easier for everyone to go in and see the variation that's happening in the country and more quickly identify where we see changes in the tender rejection indices. Right now in the outbound markets, you can see Shreveport and Portland are showing to have the biggest change in percentages over the last week. I'm going to dig into that a little bit more deeply here. I'll give you a quick overview for those of you that might be new to definition of the tender rejection index in general and what that means. Again, as Grayson said, we're going to show you guys where you can go to dig more deeply into this at the end of this webinar. We're going to show you on the website and in Sonar itself, and a few places that you guys can have some access to do your own research, and then at any point in time, obviously ask questions, contact us, whatever you need to do. But right now, I'm not gonna go in as deep as I normally do on the tender rejection index definition, but I am gonna show you guys here at the end where we can go to find more information on it if you're not entirely comfortable. So with that being said, our tender reject index as the base of this new tri-delt function. And basically what that is when a shipper sends over a load request and the carrier turns it down, that is called a tender reject. And if a carrier sends over 5 or 10 loads and the carriers reject 5 of those loads, that will be a 50% rejection index. So the more carriers are rejecting loads, the higher the the more often they're rejecting loads, the higher the tender rejection rate is. So what we're looking at here is the weekly change of that number as a basis point change. So I'm going to go ahead and pull up a chart and hopefully illustrate that a little bit better, because you can get, percentages can get confusing to deal with. I know they confuse me a lot. And when somebody's talking about percentage change, is it an actual percentage change or is it a percentage point change? And let me pull up one that I think I already have made here. That would make it easier. So I'm going to go ahead and pull up the Outbound Tender Rejection Index Weekly USA. So that is our nationwide outbound tender rejection index. And I'm going to clear that off real fast. So what you're seeing here is the weekly change. So basically it's gone down since 7 days ago. The outbound tender rejection index for the United States has gone down 2.09 percentage points, or 209 basis points. I'm going to pull up the chart for the regular outbound tender rejection index, the O-try, not the T-ry, the O-try. Well, if I can type correctly, my keyboard is not happy with me. So there you see right here. So what I want to show you, and again, I'm going to put this on a little bit bigger. I'm going to see if I can make this a little bit bigger. So effectively, I'm going to find my little select tool here that'll help me kind of do the math for me, because I'm not that good at math. Show you exactly what I'm talking about. So if I pull this back to 7 days ago, 1, 2, 3, 4, 5, 6, 7, 1 bar equals 1 day. There you see right here, and I don't think I've clicked exactly on where that line is, but it's effectively 2.09, and I did miss it by a little bit right here, but you see that it's gone from 25.3 something to 23.16. That is a 2.09 percentage point change in the last 7 days. Now, the weekly is not the only thing that we have available. So we also have the 2-week change, which is denoted by the F instead of the W. I'm going to type that one in, and for whatever reason, I can't type today. So here's the 2-week change. I'll clear that 1 week off. So in the last 2 weeks, the outbound tender rejection index for the country has dropped 2.5 percentage points, or 250 basis points. If you see here, I'm going to do just a quick one and go back 14 bars, or 2 weeks, as we like to call it. And you see that the change has been more dramatic over the last week than it has over the last 2 weeks. I can get it right in there somewhere. There we go, 2.5. So again, over the last 14 days, we've had a 2.5 point percentage change. And then the third version of this is the monthly change, which is actually 28 days. So I'm going to type in the otrim.usa, the otrim, and it's only gone down 1 point over the last month. So again, it's not a big, we haven't had a big movement over the last month. So what that means is basically the market is still operating at a relatively high level of tender rejections. Over the last month, we've had these big mountains sitting here in the middle, as June was a quite hectic month in terms of capacity. A lot of spot market activity. Rates continue to go up. Just to give a quick recap of what we have covered in the past at a very high level of summarization, what we saw in the spring was early spring, late winter, was a lot of spot market activity as carriers were and negotiating their new contracts with the shippers. The shippers had rates negotiated that were a year old. The market had changed dramatically. They could go and get a much better rate on the spot market, so they did. Once they put those contracts in back in April, everybody started honoring the contracts because the rates were at a good level. In May, things started deteriorating again as capacity quickly changed back in the driver shortages, produce season, container volumes picked up out of Chinese New Year. The market destabilized, and then that continued into June, and June saw nothing but tender rejection increases for the majority of the time. And I'm going to go ahead and just illustrate that on the outbound tender rejection map. So you see here, we had this little correction after Memorial Day, but then all the way up to the end of June, we saw the outbound tender rejection index increase. So back to the tri-delt. So what I had up here originally was a map of the tri-delt, or the outbound tender rejection index weekly change. This one is one of my favorites because tender rejections to me are a very near-term stat. And what I mean by that is it's something that is useful to look at in a short term of time. So in the last week, 2 weeks, maybe a month might be a stretch, but certainly it's more useful if you look at it in the current term. Like, so what happened yesterday versus today? If somebody had an outbound tender rejection increase over the last day of 5 percentage points, that's a big deal. That means that that market in particular has encountered some sort of resistance in terms of getting freight covered. And if I was a broker, I would be trying to figure out a way to capitalize on that situation. I would go in and look at my outbound tender rejection index, and I see, oh goodness, here's Portland. Portland is showing a pretty big change. So let's go down here, and you can scroll down within your screen here, and it'll tell you, and it gives you a list of what your tender rejection indexes are. And you go over here and you find, oh, there's my outbound tender rejection index weekly change. 10.82 percentage point change. So that is a massive change in tender rejections. We've probably got some isolated activity. Now, again, you have to keep in mind that this is the Portland market. So it probably will have a little bit more sensitivity to some lower volumes, especially this time of year. So you have to also take that into consideration by knowing your freight markets like LA, Chicago, Atlanta, Dallas, Charlotte, Columbus, Miami, places like that are going to have a good bit of volume in those markets. So they're not going to be as sensitive to these percentage swings. So you still want to keep that in mind. But again, this is still one of those situations where the outbound Portland market is definitely something that I want to look into if I'm a broker, and if I'm a carrier. I'm absolutely thinking, man, I can never get out of the Pacific Northwest. I think everybody knows that I-5 corridor, everything goes north and nothing comes south. So now here's my chance to look into maybe capitalizing on, I've got to go haul some freight into the Northwest, and I might have a chance to pull back out with some decent freight. Whatever methods that you have, there's a lot of people with TMSs and certain internal systems that they can look at to figure out where is the best, maybe it'll probably show up there somewhere. But here's a good spot to start is I'm finding where the market is showing the most volatility, which is very, very important in managing the freight market itself. Again, you can do that over 2 weeks. And that one's also here too. So we just had a holiday last week. So maybe that probably definitely had an effect on the week over week change in tender rejections. So maybe we just had an unusually low amount of tender rejections as shippers and carriers kind of took the week off. I want to see what happened over the last 2 weeks. So here's the 2 week change. And you see, it's not quite as heated. So, I mean, you still see Portland is showing up a pretty big deal. So now you have 2 points of validation that the Portland market is definitely feeling some pressure. Shreveport down here, again, also feeling some pressure down here on the Gulf Coast. These are places that I want to start looking into. And if I'm a regular carrier, I definitely want to maybe think about capitalizing on that. Maybe if I have some contract business down there, maybe I can start playing in the spot market a little bit and raising the rate a little bit, capitalizing on it. If I'm a shipper, I'm certainly wary of where these resistances are. This is a situation where maybe a shipper would look out here and go, oh man, I'm probably not going to get the best rate this week. Maybe I can hold some of this freight till the market calms down a little bit and get a better rate, because I'm sending my tender requests over to my normal carrier, or maybe I'm a smaller shipper and I don't have contracted freight. Which, if that's the case, it's insanely useful to look at this and kind of figure out where my best opportunities for getting the best rate possible are, because tender rejection activity tends to be in front of the spot market in general. So this screen kind of gives you a little bit of insight into what everybody's thinking in the overall freight market. Now, everybody's going to have their isolated instances where, well, I'm not having any trouble with my carrier. I'm not having any trouble with my shipper. Like that. Yes, of course not. But in those instances that you do have trouble, you can look at this and validate what you see. So you might have something that's happening in the broader market that you're just not simply aware of. I know back in my previous days at a carrier, I never knew was it us that was doing something wrong, or was it, the broader market? Was it the economy? I never knew. This right here is something that gives you kind of a window into the bigger market picture. It helps you validate what you see. It also can start you on journeys down the path of, maybe finding new opportunities. Most carriers, actually all carriers, no carrier out there is bigger than 2% of the market. So you've got 98% of the picture out there that you are just not simply aware of. This tender rejection index is kind of a derivative and a indirect way of looking at that bigger picture. So that being said,
and I'll pipe in here and just mention that the weekly, biweekly, and monthly changes are available in all 135 markets and can be broken down by equipment type for van and reefer equipment. So you've got a further granularity to be able to break that down and really pinpoint what you're looking for.
It's a good point, Grayson. Thank you for chiming in there. Anytime I kind of forget to give a more pointed detail. So the van, and like right now we're looking at the van turn down, and then I'll turn on the reefer, which tends to be a little bit more volatile, along with the reefer market in general, as you would expect. So you're going to see some dark blues and some light whites in the reefer tender area. What's interesting to me right now, look at this area right here in the reefer tender rejection index monthly change. That is you're seeing some sort of big spike in the Eau Claire market up in Wisconsin. So again, these are available in weekly and bi-weekly increments. Over the last week, it hasn't really heated up that much. There's Portland again showing up. So again, these give you a quicker view of what's happening in the tender rejection index, which again will help you kind of understand what's happening in the market in general. And just because you're not seeing something in your rates today, this can be a precursor to that, because this is an activity-based stat. So it's telling you what happened yesterday in the freight markets, in the contract freight markets. So again, activity-based is a lot faster than some of the financially based measures, because there's lags and other activities that have to happen before those numbers come out. This is one of those measures that'll tell you exactly what's happening, what they're actually doing right now actively. That being said, I'm going to go ahead and move on to our next round of new tickers, which are the employment level tickers that Grayson talked about. So Grayson mentioned that these are BLS data. This is Bureau of Labor Statistics based data. And what they do is they come out with surveys, and they basically do quick studies on what employment level. So how many people are actively employed in that specific industry. Right now we have retail and transportation and warehousing employment level statistics available in SONAR. We're adding more as we speak. There's going to be a variety of things coming up. We'll get into those later, but right now I'm going to stick to the transportation and warehouse, and the retail ones. Now you might ask, why transportate? Well, you know why transportation and warehousing, because that's the industry we're in. But then there's retail, and retail is actually very important in the overall economy. So remember when I said that this is going to be two totally different types of statistics to look at. One is the more granular near-term statistic. This one is the more broad, longer run statistics. So when I look at employment levels, I'm really looking at big picture economic activity. And I'm using those as kind of a bigger picture analysis. So when you're thinking about market cycles in freight in particular, you look at the internal market as it's happening that day, that week. You want to make day-to-day decisions. You look at the outbound tender rejection indexes. You want to look and see how that relates to the bigger picture. So maybe your tender rejection indexes are moving up, and they're moving up over a long period of time. Well, what does that mean? Well, that means that probably there's not enough capacity in the market. And these employment level statistics will allow you to see, wow, there's an explosion in growth. And what I have right here pulled up is the warehouse employment seasonally adjusted. What the seasonally adjusted means is basically they smooth out the data for the natural bumps in all the employment levels. So like, if they hire a lot for Christmas, as they do in retail, which I'll explain to you here in a minute, those won't be as severe of a bump. They'll be more moderated because they take that into account. And so you can see the longer running trend line a lot more clearly. Right now I have this warehousing one seasonally adjusted. I'll go ahead and show you what it looks like not seasonally adjusted. And again, these are longer running stats. So I like to click on that 5-year button down here at the bottom to see what these look like over time. And you can see, so warehousing has really jumped up over the last 5 years. A lot of employment level information here. And let's see if I can show you what retail. So again, we're going to go through where to find all these tickers and explain those here towards the end. We're going to show you where to find all of the list of these so you can kind of understand where they are. And then also show you, other than just a definition, but we're also going to show you how to understand what they're actually saying too. So again, please don't if you don't know why I'm just typing through these showing rees.usa, like, don't worry about it. That's something that I know what the tickers are right now, and you will too. I'm going to show you where to find all those towards the end. Me and Grayson are going to go through how you can figure out and get your list on your own and figure out what we have. And then that'll take you down the rabbit hole of figuring out where to look at. But right now I'm going to just demo essentially what our employment level statistics can be done. So I'm going to give you a specific example of something I actually looked at this week. So I actually don't want to look at the retail non-seasonally adjusted. So REN.USA. So you can see in these ticker symbols, there's a commonality. The S at the end will mean seasonally adjusted, and the N will mean non-seasonally adjusted. So when I was looking through some of our economic level data this week, as I'm thinking about why, we saw some of the tender rejections have been pretty much on the decline since the end of June, which is not unusual. Anybody that's worked in freight, you actually know that the end of June is a very heated time of year in the freight market. It's the end of the second quarter. It's also the kind of the week right before the 4th of July holidays. A lot of overheated activity. And my thoughts on this, actually, I think everybody intuitively, especially if you've worked in freight or any kind of transportation sector, you intuitively know that June is just going to be a big month for you. The warmer season brings on a lot of capacity stuff. Like if you don't have a big June, chances of you having a big year are not as good. Again, that kind of can go in May and June, but typically with warmer weather because there's more freight. I mean, January traditionally is a low freight year. Now, this year was not exactly the same way, but we're in a totally different time, and I'm going to show you another economic activity indicator that we have in SONAR here in a little bit that will elaborate on that a little further. But right now, we're looking at the retail trade employment non-seasonally adjusted. So I love non-seasonally adjusted because it tells me what's actually happening right then. I mean, I can do the smoothing. I can see the line for myself. And we actually have these studies up here that you can click on, and you can make a moving average line, which is essentially a trend line that you make that'll help. Moving averages are basically trend lines that help you smooth the data out itself. So without getting into too much detail over moving averages, just know that right now that is essentially just a trend line. So there's basically my seasonally adjusted line in that red line moving average that I just made. And but right now I want you guys to look at these peaks and these bumps. One thing about charts is scale can really influence the way you perceive the data. And being an analyst myself, I really, sometimes I get really frustrated looking at a chart because I can't get the scaling to show me what I want it to show me. But it's a very good way. Charts are very good ways to have a nice, quick overview of what's happening. And right here is no different. You see these big, huge spikes right here, and it makes so much sense when you see it on paper. I had a psychology teacher back in college tell me, you're gonna hear a bunch of stuff, and you're gonna say, well, yeah, that makes sense. That's common sense. Everybody knows that. Well, yeah, it does, but you didn't really think about it until somebody pointed it out. So you just kind of take it for granted, and now you have a deeper understanding of what's going on in your environment. So that's what I'm showing you with this retail trade employment data. Guess what? Retail goes up in the winter during Christmas season. That's common sense, right? But now you have something factually to back it up. You can now see, here's your winter holiday. But one of the things that I gained from this, some insight I gained from this the other day was, you know what? Retail has two bumps. Now this bump, which is actually in July, is a little mid-year bump in employment, and it happens every year. Look at these cycles. They are very regular. That's like a heartbeat. Not a great heartbeat because you might need to go to the doctor with this bump down here, but this mid-season bump is actually indicative of the retail's season. So midsummer, there's a lot more employment. Well, how do they employ people? With money. And so they get that money from all the revenue they're making off their sales. Well, who fills the store shelves? Transportation and trucks. So what's happening in the broader market and is basically you have all these stores and everybody that understands the psychology of human nature. When it warms up, people get outside more. They leave their houses. They buy grills. They buy lawn equipment. They redo houses. Construction starts, are going off. They're in full effect, or just to name it. There's a reason people leave their houses in the summer when it's warmer. They don't get out as much in the winter, except to go shopping to buy all their friends and family presents. And then once that's over, they retreat indoors and don't come out until the sun shows up again in May, June. So everybody's taking summer vacations in the summer, in June, July. And specifically the week of the 4th, they just go and leave. They go shopping. They have a few days off, a few extra days off. They're buying fireworks. They're buying bottled waters and Cokes and drinks and more food because they're having barbecues. They're just more active. So suppliers out there, shippers out there want to ship more freight. Make sure that they have that inventory available to the retail outlets. So with the retail outlets, don't have their product on the shelf, they don't get the money. So what they do is they make sure that it's pushed out before the vacation period of July the 4th, because they're the people taking vacations too. So they're actually part of the people that they're trying to service. But they know that they're also going to be short-staffed that next week for covering all this stuff. The drivers are also going to take vacations. Carriers are going to have less equipment available. It's just the nature of American society today. So at the end of June, you have this natural break of economic Q2, where everybody's trying to grab as much revenue as possible. And then you also have this natural little break in society where they go out and they spend a bunch of money purchasing things for their vacations and the 4th of July and whatever else they want to do with their vacation time. That's kind of the natural tendency in it. And I gained all that just by literally looking at the chart, and I was like, you know what, that's exactly right. Retail season. Now this chart is not 100%, it does not have a 100% correlation to the freight market itself. Obviously, there's a decent amount of, similarities, but again, the freight market does not die right away like you see here in the retail segment. So don't take that away from it. But this does give you an idea of, you can look in here to kind of validate some of your thinking on why people are why markets are reacting the way they are. And we have that available on numerous tickers. We're going to show those to you later in the segment where we're showing you the tickers of each individual segment. I would take you through a few others, but I want to kind of move on to some other stuff. And Grayson, you have?
Yeah, so we actually do have a question that came in from Kyle, and it's in regards to the trucks and market indice. He's wondering if there is a way to view historical data, meaning are we able to look at trucks in market today versus yesterday or even the day before?
We don't have a change in truck delta at the moment. There's actually a functionality feature that's coming up in the future releases. Let me go ahead and pull up truck right now on the map. Actually, I really like the truck feature. It's one that's a little bit more complicated to understand, however. So I'll give a quick rundown of what the truck index is. So trucks in market as it is. Now, it may be a little deceiving in the way that it's named, but it's still the general direction is something that I think that has value. It definitely adds color to when you're looking at freight markets in general. So you see this today button up here. And I've pulled up the trucks in market index on the map. So what the trucks in market index is telling you. So essentially over the last 2 weeks on Wednesday, what the trucks in market is measuring is the average of the previous 2 Wednesdays versus what it is today. Now, we're not saying that we have the entire market of trucks. What we have is a sample size of trucks that we have aggregated using, various data like ELD, EDI, IoT information, and we accumulate all those things and we smooth them out to a point where we're not, if there's a bunch of, new pieces of technology that show up in there, we smooth those out and we say, okay, the baseline is the last 2 Wednesdays average trucks that were in that market that we have registered through our various data sources. So if today had 11 trucks sitting in, let's say, the Shreveport market down here, and the last 2 weeks on Wednesday, because as we all know, the freight market has got a pretty solid weekly cycle on it, 7-day weekly cycle on it. So we average the last 2 Wednesdays, and it's 10 trucks on average that are in the Shreveport market. Today it's 11. Well, now your trucks in market is going to show 110%. Right now it's showing 99%. So there's not been much variation over the last 2 Wednesdays in the Shreveport market in general. So what that kind of in general is telling you is we now have a little bit less trucks in that market than we did over the last 2 weeks. So they're operating at a slight deficit of what they were. Now, where this is useful, or whether it will be more useful, I should say, is when we get this button up here to change the date. And then you can see kind of at least a sample size. I want to be clear here. It is not telling you the entire market of truck availability. It's giving you a sample size of how many trucks are basically in their market. So when you see something that's the darker blues moving across the country here, you're going to see some of these trucks moving through these areas, and you'll actually be able to see a little bit of truck movement patterns. And I've actually done this with some screenshotting, kind of watching some trucks move off the west and into Dallas in the early part of June, when we saw a big surge of freight. And again, it takes a little bit of work right now, and I know that's not incredibly great, but coming up, that's just one more feature that we'll have in there. I hope that answered your question. If it didn't, again, please contact us. I'll get deeper with you if you want to, or anybody that's available will. Is that good?
Yeah, that sounds good.
All right. So I wanted to kind of hit on a few things before we started going back into some more use functions. I think I covered the tri-delts again, and the employment level information. I showed you guys the warehouse and retail. We also have trucking markets. I think I should go ahead and actually do this and just show you guys something that I think is really cool. So I'm going to build a chart here that is going to be the warehouse and trucking seasonally adjusted. And what we're going to see here, and that's not as dramatic of a chart as I wanted it to be, but you can see they move somewhat together. But what I really want you to see is this gap right here is shrinking dramatically over the last several years. A lot of warehousing jobs are being filled or created, I should say. And in relation to the trucking jobs, even though they've gone up over the last bit, not going up as rapidly as warehousing. And that's something that we've seen in the industry itself as Final Mile and Amazon have really become a bigger deal. Regionalized warehousing has become a huge thing in transportation right now. And I think this is a good way of kind of illustrating that and looking at it. I'm going to just throw up the trucking. Again, I know I'm kind of zipping through some of these indices. Don't be afraid of them. There's a list of them. You can go in there. And here we go. Here's a chart I made just recently. So I don't really like the call out being right there, but let me see if I can move it out of the way. So this is the truck transportation employment seasonally adjusted. Again, smoothed out for some of the seasonal movements in trucking. And what I've got here are some call outs, and you can see the rapid expansion of the trucking industry. What I've got written here is employment increases 5.75% in 2 years from this point right here. So from June of 2013 to June of 2015, trucking transportation employment has increased 5.75%. Big jump. All of a sudden, in 2015, we decline a little bit. We enter what I think some of us have called the transportation recession. The economy didn't really die. There wasn't really a recession, but in transportation, there was kind of a mini recession. Things did not grow. We did not have a lot of expansion in freight and transportation markets. And then here in the last 9 months, we've got a 1.75% jump. And from that, I'm going to go ahead and jump right in to something that I've covered in a few places over the last couple of weeks to kind of illustrate freight market, where we're at today. So the CAS, one of my favorite things that we have on here is the CAS Shipments Index. And it's basically a measure of total shipments in the freight markets. It includes rail as well as trucks. So it's a good big picture measure of shipment volume activity. Just like I showed you on the transportation employment data, this is another broader market economic indication type measure. You see right here in 2016, 2015, that area that was circled on the transportation employment, we see lower shipment volumes, which makes total sense, right? So just like I was saying, like sometimes you intuitively know something, but you need some actual data to validate what you're seeing. No, you did not. You were not as bad as you thought you were in 2016. You can look on something like this and know that, hey, everybody's bad, not just me. And then you feel good and validated. So anyway, what we're seeing now in 2017, 2018 is the biggest increase in shipment volume in the last 10 years. This is not changed. We're still looking at a pretty elevated freight market, a lot of shipment volumes going out there coming into July. And what I wanted to point out from this index that I hadn't before, or at least maybe not in this space, was that every July we have this little decrease in freight volume. So right here, July 30th, 2017, July. Let's see if I can pick it out right here. So this one's actually kind of an exception, but again, does not really go up. But again, 2016, just like I said, was not a great year. So maybe maybe it's a good year when your July goes down. And again, 2015, July. And my point of this is that we're about to hit July. So I would expect a little bit of retraction. Now, the one thing to note about July activity is that it is not really that indicative of the bigger picture freight market. It is, if it goes down in July, that's because it's a natural frequency. It's a natural occurrence of freight declining sequentially as it relates to June. So there's no reason to really panic at the moment. The Donald Trump trade talks and all the tariff discussion right now, just because we're seeing some of these outbound tender rejections decline, which I'll go into now real quickly. As you can see, they've gone down decently, but they're still at an elevated level. So there's really not reason to think that the freight market is just dying. Now, of course, if it continues to go down throughout the month of July, that may be another picture, but so far, this is a totally normal occurrence. This is not something, if you're seeing your freight rates for your spot market kind of come down a little bit, that's totally normal. I think we are seeing a little bit of a cooling, but we're not seeing the freight market just dissipate. There's still lots of activity out there, and it's by no means a big picture issue yet. And before we start into the 101 thing, I wanted to show you one more thing in terms of the broader market and in SONAR. I wanted to show you guys the FreightWaves Baltic Exchange indices. Now, what these are measures of spot market container rates, 40-foot container rates in specific lanes. So we have quite a few of these. We have about 8, 9, 10. Let's see here. Yeah, we got several lanes, specifically the ones that I think most people are interested in are anything coming from China. There are European to North America and whatnot. Again, these indices are covered in the tickers, in the ticker definitions in the sheets that we're going to show you here in a minute. And so the FreightWaves Baltic Index, China to North American West Coast. So anything coming off of the coast of China into the ports of Los Angeles, Long Beach, Seattle, this is what the going spot rate for a 40-foot container is. Now, they had been pretty quiet. You see right here, this is right before the Chinese New Year. Volumes were coming in mass. Chinese New Year, freight shuts down coming off the China coast. And then they go back to work, ramp up production, and what do you know? Freight starts picking back up. Now, the interesting thing here is this was a big leap going to the China to North American West Coast and the China to North American East Coast. That's what's down here on the bottom. That's what's up here on the top, and the China to North American West is on the bottom. It costs less money to send something west to the West Coast than the East Coast from China. That makes sense. There's a lot more miles going to the East Coast. So this last week, we saw a big spike in that. What we're thinking at the moment is that it's actually more of a carrier influenced behavior than it is a shipper behavior. But it wouldn't be shocking if we figured out that there was some erratic shipper behavior in response to some of these tariff talks. It's certainly something we're looking at moving forward. We definitely need to be mindful of the port cities as we look at it. But right now, we're simply just not seeing any real activity going into the port cities that would make us think that this is a volume issue. And I think I got a question.
Yeah, just another quick question came in about the CAS index, and it says that the charting is not actually showing up. It will give me a value, but the chart will not show up. So it might be when to click on the date, like further out.
Yeah, try clicking on one of these dates down here. Sometimes the screen gets compressed. I think that's actually a known glitch that we're trying to work through right now. Sometimes on various machines, it's very hard to replicate. If you just click down here on the one of these 6-month, 3-month tickers, hopefully that should fix it. If not, please again give us a call or contact us.
Yeah, let us know if that does not work, and that's something that we can look into and try to figure that out for you. But that should be the fix to that is just expanding the date range out.
Yeah, try to make sure that the date range is expanded. That's a good thing. So I think that about cool.
Perfect.
So I think that's about it for the weekly updates and some of the new ticker symbols. So
yeah, so what we'll do now is just kind of go through, just the generic 101 in terms of how to access some of these tickers. There's a lot of information here. So when you go into the search bar, a lot of times you don't know the specific ticker to put in or what you're looking for. So the one of the first things you can do is go up to the right-hand corner where you see hi and then the name, and then go down to the Knowledge Center. Once you click on the Knowledge Center, it will take you to our FreightWaves SONAR website, where you can scroll down and it will give you, the archives to our weekly video updates, where we've gone over a lot of the different indices and how to navigate them. You can go into the exclusive insights section, which if you click on each one of these indices, it will tell you what it is, and what does it tell me. And then also in a couple of these, we've gotten some videos where we'll eventually have videos for most all of them. Right now, it's a select few indices that we do have the videos ready for, but we are working on getting them all up. So, if you have a question about what the indice is and what it's trying to tell you, you can go through here and get a good idea of the different tickers. So, and actually back out, and we'll go back down to where it says documentation. And I keep talking about tickers, but if you'll click on the index definitions, this is all of the different tickers that we have that you can put in SONAR into the search bar for the charting functions. And so for instance, go back, we'll just use the very top one, the outbound tender reject index. You would type in OTRI dot and airport code. So if it was Atlanta, it'd be ATL, and actually those are all down here as well.
So essentially, this is what this is divided into at the moment is the first 4 to 5 letters of the SONAR tickers that are available. So the high level indices, and then up here at the top, and then down here at the bottom is essentially anything that you can turn into a market. It has a market granularity, for instance, like the OTRIs do. You can type in any of these air codes, and then the DOE, for instance, has a little bit different regional definitions. So these are the things that go behind the DOE. So when you type in DOE.USA, you would also type in DOE.PAD1A, government naming convention there. And then again, here's your Freightos Baltic Exchange Lane Index codes. These are the ones that are going to go after the FBX codes, for instance.
And if you cannot find exactly what you're looking for on this SONAR site, you can obviously email us at sales shipments@freightwaves.com. And one of our team can get back with you on your particular question if you have not been able to figure it out from the information here on the site.
Yeah, so I guess that pretty much.
Yeah, I was just checking to see. We don't have any more questions in the queue. So I guess that will wrap up this week's SONAR webinar, and actually looking forward to next week. Join us next week, Wednesday at 2 p.m. We are introducing some new indices that will be coming out. So we'll talk about those. We are actually releasing some turn down, some tender rejection indexes by lane, by certain lanes next week. And we are also releasing volume indices for shipments as well. So, or for tender shipments. So some exciting stuff that's actually coming up next week, and we'll be looking forward to talking to you guys about those.